Welcome back to the CA YouTube channel. I love finding special guests that know special information and that can help everyone as they are trying to blow up their business. This cat I got today, okay, he may not even love being called a cat, but I'm telling you, this dude is impressive. He is cool. He's down in Florida. He owns and runs and operates Agency Brokerage at agencybrokerage.net. They do a lot of mergers and acquisitions, and they help agency owners with valuing, selling, and buying agencies. Please welcome Mr. Mike Mensch.
Thank you, Cody. Appreciate you having me on here.
Yeah, buddy. Appreciate you being here, man. This is a cool topic because, and I'm curious, like as you guys are listening out there, as our viewing audience, later when we post this, I want you to jump in comments and let us know your favorite part of this. Also, what's got your attention? Because I know as an agency owner and other agency owners that I'm close with, or even agents that are building, like the eventual goal for a lot of people is to exit a company. Like it just sounds cool, right? It's like you grow up and you're like, dude, I would just love to sell a big old company and make a bunch of money. What do you think about that?
You got it. You're going to exit no matter what you think about it.
That's true.
You can either do it on your terms or not on your terms,
Yeah, that's exactly right. Yeah. I mean, technically retiring is a form of exit, like that makes sense. Yeah. Yeah. So how did you end up in this space? I'd love to talk to your story, what you've been through, how you've done it, and what brought you to today.
Yeah, probably like any specialty. I mean, we stumbled across it. We were doing general mergers and acquisitions back in 2007, and a client referred us his brother who owned an agency, and going to market. We had a lot of interest in it. We had private back then, 2007, 2008 is when the financial markets melted down. So getting financing for deals was really hard, but we found a private lender that would finance it, and we had a number of people interested in it. So we stumbled into it, and since then it's all we've done for the last 15 years for the most part.
Wow.
230 M&A transactions, probably 1,500 valuations of independent agencies, and working with clients all over the country. So we've learned a lot in the last 15 years.
Wow. That's awesome. I was fixing to ask how many deals. 230 M&A deals, mergers and acquisitions, for those that are learning the terminology today, just like me. Okay. 1,500 value. This is like you know what this is, Mike? This is like a private coaching session for me today. You're coaching me on the importance of this and how everybody needs to pay attention to this. And then our viewing audience gets like a live listen in from Mike educating Cody and the world on how this stuff works. Okay. So thank you for that.
My pleasure. It's a hot topic over the last 5 years too.
Man, it is blown up. I'm kind of curious too. That brings up a good point. Why is this space blown up so much? Because like everyone is like looking at this or currently doing it.
I mean, it's 2022, over the last 10 years, throughout the whole U.S. economy, really, private equity has just exploded. There's triple the amount of capital in private equity investment, and we're feeling it in the insurance space because it's such an attractive industry. You have recurring revenues, you get economies of scale. So in 2008, there was probably like 3 private equity backed brokers. Now there's over 40. And, I think in last year, there were over 1,000 announced acquisitions. 10 years ago, that number was probably 300. And that's just the publicly announced ones. That doesn't include all the ones that happen behind closed doors.
Yeah, that's true. That's a ton, man. That's crazy. The growth that's seen. You also mentioned 1,500 valuations. So why would an agency care about a valuation at this point? Maybe they don't even want to sell.
So we'll do 200 or so this year. Half of those are for either lenders or buyers. So a lot of lenders, when they're financing on an acquisition, they need a third-party valuation. That's kind of their underwriting process. So we handle quite a few of those. Sometimes if somebody hasn't acquired an agency before, they want somebody else's opinion on what it's worth, or maybe help with the due diligence of the acquisition. And then the other half that we're working on are really just us working with agency owners that are trying to figure out when and why, and what the agency is worth when they're ready to exit, what the real numbers are going to look like to them. So last year we did 35 transactions for clients. I think about half of them were relationships we had for 5 or more years, meaning we were updating their valuation every other year, something like that, until they were ready. So people, it's an asset that you have. You can't, unlike the stock market or anything, it's hard to track the value of it. So you go to an expert and get a valuation every once in a while just to get an updated gauge of where you're at.
It makes sense too, because it's like, okay, even if I'm not ready to sell, if I ever would consider it, I'd need to start thinking I'm guessing with the end in mind, the plan to exit. What does that look like? Like there's certain documents, there's certain, EBITDA, and there's certain P&L and financial statements and that kind of stuff. So it makes a lot of sense why someone would at least pay attention to it. And they're learning along the way in that process during those valuations, I would guess.
Right. I mean, ideally, we want to work with someone for a number of years because there are things they can do to improve operational efficiency, get legal structuring, things that if they do the right steps when they go to exit, they're going to end up with a lot more money net of taxes.
Yes.
So, ideally, we like to work with folks for a number of years. Probably, 25% of our clients every year come to us and they're ready to go by the time they come to call us. So it's better to plan it out because market changes, like I said, there's planning things that can be done to improve the value.
Yes. What are some of those things? So we talked through improving operational efficiency. That would get as an agency owner, if I was listening, that would get my attention right out of the gate. What does that look like?
So the biggest expense on anybody's P&L is the labor costs, right?
Yep. Payroll. Yep.
So it's looking at the efficiency of your agency from a number of employees and cost per employee perspective. What are your revenues per employee? And then what is it as a percentage of your revenues? What is the payroll, commissions, and all those expenses costing you? Because there are industry benchmarks. It's not insurance industry is not that complicated. There's a lot of data out there, but we see them across the board. Where agencies are paying out 60% of their revenues to commissions and staff salaries, and then we see some that are paying out 25% of the revenue. So there's a pretty big range, in spite of the fact that it's a pretty simple business model.
Yeah. There's even probably agencies that are paying out more in payroll and commissions than they even bring in, right? Well, that's a big problem, right?
That happens sometimes. Yeah.
That's crazy. I'm sure it does. It's kind of interesting too. This is a cool topic as a business owner. Like an agency owner is a business owner, right? And as an insurance agent, you're a business owner. And it's cool to talk about this topic because if you think about it, it's so easy to get a license to sell insurance. The barrier of entry is so low. And people don't always know, actually, me being one of those, to run a business when you get licensed. Like the points, like I'm a salesperson. Well, then you evolve through time from just being a salesperson to all these other things, right? You're a boss, you're a leader, you're a COO, you're a CEO, you're a CMO, you're an agency owner, you're a business owner, et cetera, et cetera. One question I had was, is there a percentage of maybe not commissions, but like payroll and labor to revenue? Is there a typical percentage of where you should be? I've heard different numbers, but I'm curious.
Yeah, I actually have an article on our website too that kind of addresses it because where those numbers fall depend on your operating model. So if the agency is what I'll call a marketing driven, where the agency is driving the leads and then they just have people that are basically order takers closing the sales, that's one financial model. If you have a producer model where the producers are out beating the streets and bringing in business, that's a different model because you're paying more to them to bring in that business since they're driving the business in the door. So if you're, let's talk about the P&C space because I know that one the best. Okay. I mean, the industry averages, if you have producers, you're paying them something like 40% new commissions, 30% all renewals, plus or minus 5 or 10%. Some agencies are paying, 60, 50, 60%. And all that does is eats away the profit margin of the business. And it's a problem when they go to sell because all the large brokerage firms are operating on a 40-30 split with their producers, and then they've got to transition the producers of the acquired firm to their, corporate structure, and that's created a number of issues and transactions we've had. So, you got to monitor the commission split, and then on the labor side, it really depends. If it's personal lines, the payroll is usually around 30%, plus or minus 5% of revenues. If it's commercial lines, the support staff sometimes are as low as 20% because, again, you've got producers that are the main face of the company with the client, and the support staff are just processing.
Yes. Okay.
I was going to touch on one thing. So you mentioned, as an agent, you go and get a license and you start out and you're selling and then you transition.
Yeah.
I mean, there's a transition that people have to go through as a business owner, because most people start off as the technician or the salesperson, right? So one of the articles I wrote deals with which personality type are you as an agency owner? Are you that technician that's, spending most of your time dealing with clients? Are you the entrepreneur that's focused on processes and scaling the business? Are you a rainmaker? Or are you really like a enterprise builder?
Yeah.
And because the people need to recognize that it takes different personality traits to graduate to the different levels, because a lot of times they themselves have to evolve as a person and change their way of looking at things. So
yeah.
Yeah.
Good. That's so good. That's so true. Yeah, so true. And they can find that on the site, Agency Brokerage.
Yeah, it's on our blog. There's an article that, and I really adapted some things from Michael Gerber's book, The E-Myth.
Yes,
because he talked about the quadrants of business owners, and
that's right. Good stuff, man. Yeah, good stuff. I mean, and it's stuff that agency owners, again, or agents that want to be agency owners at some point, really got to pay attention to. Yeah, so I would definitely, if you guys are listening, you're like, man, I need more information. I want to learn, whatever. Make sure you're checking out the site, agencybrokerage.net. There's going to be a ton of information. Sounds like a ton of valuable articles, things that you can learn along the way. Really like an educational model is what it seems like you'll have, Mike, where we're leading with education. We're helping people. We're bringing value. And then, hey, along the way, we'll value some agencies. We'll help them sell and we'll help them buy and find some, anything else on the value piece? Because I want to touch on selling and buying a little bit too. Anything else on the valuing an agency piece that we haven't talked about?
Well, I mean, so we do a lot of valuations, obviously, and people always ask, is it a multiple revenue, multiple earnings? And
yes,
I mean, it's really a combination of both. But as you scale up and get bigger, it's more based on the earnings and the recurring revenues than it is the actual, total revenue. So it's not like if you're $1 million of revenue, somebody's not buying a book of business; they're buying an enterprise, because the revenues are sufficient to support the operations the way it's operating. So you really have to focus on your bottom line to drive the highest value.
Yes. And do you help agencies of all size, or is there a certain sweet spot that you'll work with?
Our range is really around $500,000 of revenue to $5 million. We do some, we'll go below and go above sometimes, but that's,
sure,
our sweet spot is in that range.
That's good. Well, that encompasses a lot of them.
That's probably, there's a lot of small ones, I guess. So that's probably 40% of the market share.
Okay, cool. Yeah, that makes sense. And then what about the selling piece? And we start thinking about, okay, I want to sell. I want to start to think about selling my agency, or I want to sell it, whatever. What should someone start to think about when they get in that mode?
Well, when do you want to exit is the first question, because if you want to exit next year, you're not going to achieve the highest valuation by waiting until you're ready to exit and then moving forward with the process, because most buyers want you to stay on for a transition period. The longer you're willing to stay on, the more creative the deal structure is going to get, and the higher the payout. A lot of the private equity buyers, that's really their model, is to partner with somebody, and they give you a cash payment up front. You roll some of your proceeds into their stock, and then they want you to ride along with their stock growth. So first question is always, when do you want to exit? Because then you got to back into your strategy based on that.
Yeah. So let's say it's June 2022. Let's say you know what, I'd love to exit in the next year, 2023 next year, like you mentioned.
Yeah. So, you really need to start now, because again, if you get to the point where you want to be out the next month, after the deal closes, it starts to limit the number of prospects of who's willing to, do an acquisition like that.
Yeah, because then in that case, they have to find someone to actually operate or run.
Right. You're trying to find the buyer that's comfortable with that. Right.
Yep. And then if they're not, I guess they got to find someone to plug in or maybe promote from within. There's a lot of different ways to take that angle, I guess.
Yeah, correct.
Yeah.
And if you're involved in sales, let's say you're a commercial P&C agency and you, the owner, have your own accounts, you better plan for a longer period, because you've got to transition those relationships over. If you haven't planned in advance to transition all your personal relationships over to the staff, then you should expect a longer period of time.
Yes. Yes, that makes sense. It's that's good. We'll set some proper expectations
Yeah.
for our audience because there's some crazy expectations, I'm sure. Um, how do you manage some of those? Okay, I have a few questions that popped in mind. How do you manage some of those expectations and really guide people on what, um, because if they really want to sell, but their expectations are out of whack, they're just not going to sell.
Right. So they're not ready yet. So our first process is always to do the valuation, and we'll do that for free for the agency owner just because we want to learn more. And then we've got to
That's
set the
great.
right expectation because of our activity, we know what the market values are. We're usually pretty accurate. So if somebody comes and says, I want $5 million and we valued at 3.5, there's no point in us proceeding because we're not going to achieve what they're trying to achieve. So then
Mm,
we back up and say, all right, either you're not ready or the business is not ready to get to that number. So we'll update the valuation every year and continue to work with you until you can achieve that type of valuation. But we're not
yes.
going to we're not going to spend our time if somebody's not in line with where the reality is at, in the
Yeah.
current market.
Yeah, that makes sense. So if we think through, let's just say that we've got, I mean, what's like the most common agency you run into about, I mean, of the ones you really, is it like a million, is it 500K to $1 million a year
Um,
in revenue?
I mean, last year I think our average client was maybe 1.5 million of revenue, plus or
Okay.
minus.
So let's use that as an example. Okay. So 1.5 million in revenue. What would obviously there's variables, but it's P and C, et cetera, et cetera.
Mhm.
What would be an average, like a range of multiple of what they could get? So that's the revenue. We don't know what the profit is, et cetera, et cetera. But how do we
Right.
think through? And we hear numbers of like 1x, 2x, 3x, 8x. Like it. Obviously, the bigger it gets, it can grow. But what's your
Right.
thoughts on some of that? What does that look like?
I mean, our over the last couple of years, we've sold them. It always depends on the agency itself, the line of business, the quality of the agency. So I'd say as low as 2 times and as high as 5 times we've transacted them over of revenue.
Okay.
That's what we've been seeing over the last couple of years. So that's a pretty big range.
Yeah.
But,
What was different from the 2x to the 5x?
the quality of the agency. I mean, the ones on the lower end are dealing with non-standard or
Mm,
carriers that are not rated, or the revenues are not consistent year over year. The ones that are getting the higher multiples usually a little bit larger, uh,
yes.
consistent revenues, growth, good profitability.
It's good. That makes a lot of sense. Profitability, growth.
Yeah, I mean
Hmm.
those are the big things: growth, profitability, you know, stability of your team, things like that.
Yes. Team stability. I love that. That's so good. That makes such a big, drastic impact from year to year,
Yes, I
month to
mean
month.
it's hard to grow if you're having high turnover of employees.
No doubt. Is there something that you notice that those that have less turnover do more of than those that do? Is there something that stands out?
But there's a balance because sometimes they're overpaying everybody, so they're not going anywhere.
That's a good
Yeah.
point.
But I mean, if you have an engaging work environment, you're investing in your employees, you're giving them opportunities, you can still pay them fairly
Yeah.
and keep them engaged. It's who has the highest turnover, probably the lower pay jobs,
Yep.
in a position where they feel like they're just pushing papers or something like that. There's not great engagement of the employees.
Yes.
We've internally here we invest heavily in training and doing a lot of things with our team, and those are the things you have to do as a business owner. You want to invest in their growth and build
Totally.
that culture and environment where everybody feels like they're working together.
For sure. Yes. 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 And those are things that people need to be thinking more about as well. I mean, the culture piece as you're building a team, the people, man, so freaking important. That's such a good
Yeah.
point to talk about. What would you say? Are there certain things that you've noticed where, from I mean, we mentioned a few, but like quality of the agency to not, are there certain things that maybe just not like they're inconsistent or better carriers, et cetera? Those are great examples. Or is there something like something specific that most of the agencies that get a higher valuation are using or doing that maybe some of the others aren't?
So I'm going to say something you probably like, which is that they acknowledge they're a sales organization. Their job is not to just service customers. Their job is to sell and grow. And yeah, that's really a key cultural aspect in the higher valuation. And usually the ones that are growing, it's, they recognize that they're a sales organization. They're not there to just service the customers.
Yes. I love that. Yes. I love that answer. That's so strong, man. Is that a leader, is like falls from the leader on whether we're a sales related?
Absolutely. 100%.
Okay. On that note, I wanted to add too, because dude, this has been so good. I want our viewers to make sure they're soaking this up, using this, checking out the site, throwing stuff in comments. Like I told you, this little coaching session has paid off. I've got an entire page of notes all over the place. Just John Madden on a whiteboard, wherever I can write it, we're doing it. How long have you been doing this again?
M&A more than 15 years, just in the insurance industry, 15 years.
Dude, it shows, man. It shows. I love this. This is strong. We're gonna get you on stage at 8% one day. This is so valuable though. Seriously, I know I'm like, I have fun. We're playful, whatever. But like, dude, our agency owners need this so desperately. I need to have you talk to our Power Players group. Actually, it's a mastermind. We've got about 60, 70 current members they're making over $250,000 a year. They're agency owners. We'll have over 100 at 100 at this next 8%. So we need to eventually work that in as well.
It'd be great.
Yeah, appreciate that. When we talk about buying, let's transition to buying. We'll spend a few minutes there and then we'll close up shop. What should we consider when it comes to buying? Like, I want to go find an agency. How do you think through finding the right one?
That's a good question. I mean, first off, the market is super hot, so it is hard to find acquisitions. But for the average person, it's probably through a relationship, somebody they know in town, or through a carrier rep that makes an introduction for them.
Yep.
And that's usually what I hear is the avenues for the non-large buyers finding acquisition opportunities. It's through somebody they know, made an introduction. And so, as long as it's a business you understand, right? And likely needs to be near where you're located. I know some buyers that have gotten carried away and do acquisitions that are pretty far away from where they're located and end up regretting trying to manage a business from too far. But really, it's, if it's a P&C agency, it's not that complicated, but you just need to make sure you do your due diligence and you understand what you're getting into.
Yes.
I met with a guy maybe 2 years ago that he bought a local agency and closed on the deal and called me because he realized he didn't even know what he bought. Found out the book was like 25% commercial lines. He didn't have a management system, he had nothing but tax returns from the seller, and was panicking because he didn't even realize what was in that book of business that he bought. And make sure you do some due diligence.
Gosh, how important is that people do their due diligence and they work with a professional when they haven't done this a bunch?
Absolutely. I mean, if you're spending hundreds of thousands, millions of dollars, whatever it is, the cost of getting somebody that knows what they're doing. And I'm not talking about calling your accountant and getting them, because most accountants don't really understand agency operations. So, no. I mean, the value that we contribute for that service that we provide is huge. I mean, we've had clients that, I remember one deal 10 years ago, it was like a $5 million acquisition. We went through, did diligence, realized some of their numbers were overstated and saved them $500,000 on the purchase price. So,
wow.
And it cost them like 10 or 15 grand for the service. So,
Geez. I mean, and you're right. That's nothing over the course. I mean, instant savings, but just over the course of the life of the agency. Like, if you look at the amount of money you're going to make from an acquisition,
you make, the deal is made or broken on the structure of the deal and that first probably 6 months.
That's cool.
Because after that you get your handle around it and you're running and everything. But if you don't do your due diligence and you don't know what you bought and you don't have a good integration or plan of once you close the deal and take over the business, that's where the mistakes are made.
Yes. And if someone's like, okay, I get it, I'm interested in all this, it makes sense, I want to be involved, What is the steps to talking and working with y'all in some respect? What is that? What does those steps look like?
So, I mean, first, somebody can go to our website and sign up on our newsletter. We send out at least monthly newsletter of different deals that are different opportunities that we have that we're working on. And then there's other information on M&A, related to M&A activity and everything. It's too hard for us to try and go and find an agency for everybody that calls us. So we don't do, if someone calls and says, I need an agency in Atlanta, we can't do anything with that. We're primarily a sell side when it comes to the deals themselves. But if someone has an agency that they're in discussions with to purchase and they need advice on, what to pay for it, due diligence, things like that, those are services that we offer. So if you've got a deal that you're working on, we can help you with it. Otherwise, you can get on our newsletter and contact us on any of the opportunities you see that we're putting out there. But we can't go find acquisitions for everybody that calls us. I'd run out of time and run out of money trying to do that.
Totally. No doubt about it. That makes a lot of sense. That's really cool. Well, buddy, you've been phenomenal. I appreciate you sharing all this today. This information is so stinking valuable. If they have questions, is going to the site, learning, getting on the newsletter the best things to do?
Yeah, people can email me too. If you want, I can share my email address.
It's up to you. Yeah, that'd be great. That's cool.
Yeah, my email is my first initial, so M, last name, which is Mensch, M-E-N-S-C-H, at agencybrokerage.com. It's not the website, it's .com.
Cool.
So feel free to email me, but there's a lot of information on our website. I don't churn out a lot of articles. Liz is our marketing director. She's listening in.
She's awesome, by the way. Love Liz. She's awesome.
My goal is like 3 or 4 articles a year because I want it to be useful information. So hopefully people will see that when they start digging through. Well,
you can tell your stuff. This is such a hot market. You're exactly right. Such a hot space of our industry right now. And so I appreciate everything you're doing for this. I'm enjoying getting to know you and Liz and the rest of the team. And I appreciate you sharing everything today on our channel and podcast.
My pleasure. Thank you. Appreciate it, Cody.
You got it, brother. Thank you, Mike. Okay. I love that episode. I'm telling you guys, you got to pay attention to this stuff. You got to go check out the site, agencybrokerage.net. Thanks for listening, and we'll see you on the next one. Hey, if you enjoyed this, I got another one you're going to love. It's right there. Click on it. See you in there. Okay, as you guys are jumping in, I'm going to throw out some big claims, man. This dude did like $330K his first year. He protected like 458 families. He's got an agency now that'll do millions in premium. Like the dude's